The 9th edition of the China-Africa Cooperation Forum, the FOCAC, was held earlier this month in Beijing. It was a big diplomatic event that culminated with a Chinese pledge to provide over $50 billion in financial support to Africa, including a commitment to triple China's credit lines to the continent to $30 billion. But is this what Africa wants and needs? To talk about it, I'm joined from Mauritius by Géraud Neema, an analyst at the China Global South Project. Géraud Neema, hello and welcome on Business Africa. So Africa has not left Beijing empty-handed. Still, China's trade surplus with Africa rose to a record of $64 billion last year. When are we going to see what South African President Cyril Ramaphosa asked, more sustainable manufacturing and job-creating investment to reverse this trend?
That's the real challenge facing trade relation between China and Africa today. On the other hand, we have an economically better developed partner with a much larger and more demanding market. And then another partner, the African continent, which has structural market problems, which means that it is not always able to reap the commercial advantages that China has to offer, which means that beyond the fact that China can lift the barriers, taxes and duties it imposes on imports from Africa, the reality is such that many African countries are not able to produce products that are likely to be attractive to the Chinese market. And that's the real challenge today, to create economic diversification, a strong manufacturing industry in Africa that can produce products that are attractive and can enter the Chinese market. I know that China is now giving huge priority to agricultural products. That's why we're talking about the export and import of avocados from Kenya, South Africa and Zambia. But the problem is that the deficit is so massive that this will not be enough. It will take a lot. It will take a lot more than to make up the shortfall.
And the question becomes, is it a Chinese or African responsibility?
And I think that as Africa's leading economic and trading partner, China has a certain degree of responsibility to help and support African countries to diversify their economies, enable them to take advantage of the access to the Chinese market that China is offering today.
Do you see a risk that African countries could be overburdened by debt and projects that don't match their needs? What can be done to avoid this?
I don't think there's anything to worry about that, because when you break down the 50 billion that's on the table, it touches on many sectors. We're talking about direct investment, about development aid, about support for agricultural programs. We're talking about an envelope that could be used for various projects. And what's more, we don't necessarily know that it will be in the form of loans. That's one thing that needs to be clarified. Another thing that needs to be explained is the African government's fears of loan from China. Beyond what people may think, the public debt of African countries is not a Chinese debt problem, because the bulk of the debt of African countries comes from their domestic and international market. They do not have large loans from bilateral debt. Bilateral debt accounts for almost 11% of the debt of African countries. So when we look at the bilateral level, there is no more problem with Chinese debt. The essential question now is what mechanism will be put in place by African government and China to see how these envelopes will be allocated to projects. As soon as you have private companies, Chinese mining companies investing billions of dollars in countries like the Democratic Republic of Congo, this amount will be quite easy to reach after 3 years. All it will take is 3 or 4 big African mining investments. It will be easy to achieve, and then the Chinese government will always be able to say that it has kept its promises, even though all African countries won't benefit from it. Morocco will benefit from it, and South Africa too, because these are the prominent countries today that are receiving the big Chinese investment on the continent.
A lot of projects seems to accommodate Beijing interest in Africa's mining resources. What can Africa do to keep the upper hand?
Today, African countries calling for local processing for greater added value in the mining industry, value chain, need to put in place mechanisms that strengthen their ability to control their mining assets. Several countries, almost all countries, are already doing this, particularly for critical mineral. They are now asking that refining, processing and adding value to be done locally in Africa so that they can take advantage of it. And I think that beyond creating the demand, they also have to create the condition to force Chinese companies to meet the demand. Indonesia did this from 2017 to 2018 and we saw the results. Today, Indonesia produces nickel, which is processed to produce cathodes and anodes for batteries, and even goes as far as producing electric batteries. Today, the African countries asking for it don't always have the structural condition for Chinese companies to meet their demand.
And I think that at this level, there is a legislative mechanism that is put in place in terms of laws, standards that are set up by the countries.
But they also need to create the industrial and economic condition to push and motivate Chinese companies to meet their demands in the mining industry in Africa.
Géraud, Neema, thank you for your time.